So lesson 11.3 is accounting for the declaration and payment of a dividend. As a reminder, in chapter 11, the whole chapter is about accounting for transactions using a general journal. So there's lots of different transactions that need to go in a general journal. Little reminders, we started out with account for purchases, returns, and allowances. Then we did accounting for sales returns and allowances. And now we're doing retained earnings and dividends. So sort of random, but everything goes into a general journal. So that's how they grouped the information. So let me start out talking about stockholders' equity accounts used by a corporation. So the owner's equity accounts for a corporation are listed under a major chart of accounts division titled Stockholders' Equity. Most corporations have many stockholders. It's not practical to have a separate owner's equity account for each stockholder. You could have thousands and thousands and thousands of stockholders. Instead, a single owner's equity account titled Capital Stock is used for the investment of all owners. And if you own stock in a company, you're considered a part owner. The net income, here we go, an amount earned by a corporation and not yet distributed to stockholders is called retained earnings. So companies make money and stock prices go up, but they haven't distributed the earnings or how much money they make. They just keep it in an account called retained earnings. And then at set periods of time throughout the fiscal year, those earnings are distributed to stockholders, be it quarterly, twice a year, or just at the end of every year. Those earnings distributed are called dividends. Declaring a dividend, a group of persons elected by stockholders to govern a corporation is called the board of directors. And the action by the board of directors to distribute a corporate earning to stockholders is called declaring a dividend. Dividends are normally declared on one date and paid out at a later date. So for instance, on December 15th, 3 Green's Board of Directors declared a quarterly dividend of 5 cents per share. The capital stock issued is 75,000 shares, so the total dividend is $3,750. That would be 5 cents times 75,000. I'm going to double check that, grab my calculator. 0.05 times 75,000 is $3,750. So the date of payment is January 15th, declared on December 15th, paid on January 15th. So our dividends, the debit side is increasing. And so our dividends increases, and then the dividends payable, the credit side, increases. And here's our general journal. So I assume this is still December 15th. We have dividends, memorandum 43, debit is increasing, and then the dividends payable, credit, increases. Date, account debited, memorandum number, debit, and account credited, credit amount. On the 15th, we pay cash for quarterly dividends. Okay, so dividends payable, looks like they're doing it quarterly. So on January 15th, we pay right there, and cash decreases. So let's write it in. Cash payments journal. We haven't seen this one in a while. I'm assuming this is January, so we would make sure in our own check number, account title, dividends payable, check number, your debit amount, and your credit amount. And that's it. So under what major chart of accounts division are the owner's equity accounts for a corporation normally listed? It's in the stockholders' equity. Why is only one account maintained for the investment of all owners of a corporation? Remember, if you own any stock, if you own one share of stock in a corporation, you are a part owner. Not a very important part owner, but you're an owner. So there are thousands and thousands of stockholders in most corporations. So they can't list each person. That would be crazy. Plus, you can sell and purchase stock all the time. They would never be able to keep up with who owns what for how long. Which account does a corporation use to record earnings not yet distributed to stockholders? That would be the retained earnings. So they collect all the money in the retained earnings throughout the period, and then on the payout date, they pay it out. How and when do net income and dividends impact permanent stockholders' equity accounts? At the end of the fiscal period, temporary accounts are closed to retained earnings. Net income increases retained earnings, and dividends reduce retained earnings. A little reminder, 3 Green issues 1 check for the amount of the total dividend to be paid. Most corporations make this check payable to an agent or a bank. The agent then handles the details of sending dividend checks to individual stockholders. It's too much for a company to do. When this entry is posted, the dividends payable account has a 0 balance. We talked about that in Chapter 9, procedures for posting a cash payment journal. That was a while ago. What action is required before a corporation can distribute income to its stockholders? The board of directors have to declare it. And that is it.